G'day folks, welcome back to another update for gold and silver. Now gold continues to consolidate, whereas silver is reaching new highs.
New highs.
Before we go any further, make sure you hit that like and subscribe button to support the channel, and also reference the +1 videos for a deeper dive into our trading strategies. In terms of the outlook, both gold and silver had blockbuster 2025 years. Gold rose roughly 60 to 65%, while silver more than doubled 100%, reflecting a major shift towards precious metals. Distinct fundamentals, gold remains the classic safe haven, driven by monetary policy expectations, central bank buying, and macro risks, while silver combines that safe haven appeal with strong structural demand from green energy, EVs, and electronics supply constraints. Outlook remains constructive but mixed. If geopolitical tensions escalate or global economic uncertainty deepens, both metals could sustain or even extend gains, especially if major central banks pivot to rate cuts. However, silver's higher volatility means it could see sharp swings, especially if demand weakens or profit-taking intensifies. Strategic role for investors, gold remains a core defensive allocation. Silver offers upside potential, but with greater risk, so many view a modest allocation or selective industrial demand-driven exposure as prudent. So for gold, first off, on the weekly, you can see there we've drawn a Fibonacci retrace according to this bearish divergence. This is highs on the price, and it's a 23-38% range of a target we can expect. Now, on the daily, you can see they're still consolidating in that range since our last video, but we're still somewhat cautiously bullish, although notice the CCI is declining, so we might see that pullback in accordance with the weekly, and there's no other divergence currently in play at the moment on the daily. We look at the micro charts on the 1 hour. Now we've had here drawn a divergence, and I'll take it back to that level since our last video, and that'll go to that level equivalent on the CCI. That's still a bearish divergence. Now we had that target range there as a 23-38% range. We have to recalibrate that. Take that to the significant low there. In fact, it might have been that low, I believe. So we're going to move that there. Let's move it up to that range there. That's our, you can see that it's already hit that range with trading in the last few hours since our last video, and it's bounced out of that 23-38% range. But notice we're still somewhat bearish on the hourly and bearish on the CCI, so bearish momentum currently on the hourly. But if you're trading according to the daily, you want to take predominantly long trades. So again, going along from that period around about the 10th of November, if I show you the back test on the long side, you can see here, let's get rid of that Fibonacci for a moment. Going on from that period, generally what we do is we follow the moving averages of the price and the CCI, but especially the price. And the CCI gives us an early warning of a potential pullback, and it did so there. So you would have had that little trade there, closing it out, open another position. Again, notice the CCI dropping off, closing it out. Don't go short during that period. We're going long according to the daily. Going long there, close it out. Going long there, and up until where we are at the moment, last trade you would have been closing out about that area there, and possibly taking some of these trades here and letting it run and average down. But again, it's a bit of a risk, so probably stand clear. So this is silver. Now this is broken higher since our last update, and we did draw this bearish divergence on our last video. Now we had a smaller divergence down, and that's actually invalidated in that little smaller range. So we're going to delete that little one there. And what we can do though is we're going to extend that longer period divergence. So higher highs on the price from that period there, lower highs still on the CCI. Now we're going to have to recalibrate that 23-38% range on the weekly. So assuming it pulls back from where it is at the moment, we take it back to that low, and we raise that to that point there, which will be our new 23-38% target range on the weekly. So again, at the moment, the CCI is still rising, the price is still rising. If that CCI keeps rising higher than that point there, we're going to invalidate that long-term bearish divergence. On the daily, you can see there we had a resistance there previously. Now that's currently been broken, and that could look like it's going to be another, going to move that another resistance there currently, a new one. And it also showing here still lower highs on the CCI versus the same period, higher highs on the price. Again, we're going to recalibrate that bearish divergence. So what we do is go from that high, assuming it pulls back from where it is at the moment, and we're going to move that. Let's get that. Just get rid of that. Going to move that 23-38% range just slightly there. That's our new target range, assuming it pulls back from there. Of course, it could go higher, and so long as that CCI remains in a downtrend and that price keeps rising, we're going to consider that a bearish divergence. So at the moment, bullish momentum at the moment on the daily, which means you take long trades only on the 1 hour. And on the 1 hour here, again, we're going to raise that slowly, and now that's invalidated that divergence, so we're going to delete that. We're going to delete that, and also delete that target range. Now, since then, you'll notice here we've got a fresh bearish divergence from that high, and you can actually bring it right down to there in the same period from there to that high there. So let's now draw a target range. So go from that high. Now I'd like to take it back to the significant low. That probably there is a significant low before the divergence started. We could take it to that point there. The moving averages were broken, but notice a bit of a consolidation there, whereas this was a more significant break to the downside in that range. That's our new range on the hourly. We might see a pullback, and again, you can see there a pretty strong downtrend at the moment on the CCI, which is our major trend following indicator, if you like, or future looking into it. In terms of the back test, again, going long according to the daily, you would have taken long trades during that period, paying attention to any downtrend on the CCI, be cautious and getting ready to exit, and you would have exited at that point there. Avoid going short, going long again, then that point, exit, going long again. Could have let this run through the whole period, probably exited at that point. Again, paying attention to declining CCIs. But again, notice here we had a bearish divergence, and we've drawn that target range. So if you haven't already sold it, you might want to consider getting out, especially if you start seeing this moving average band bend down like it did back here. If you have the means, consider subscribing to the Patreon page where we do a weekly bullish share scan. And these are some of the trades we've taken open and closed since the 21st of September this year. And they've returned at 14.42% since September, which is not a bad return.
That's pretty good.
So to get access to that bullish share scan run each week, subscribe to the Patreon page, links in the description below. Hit that like and subscribe button. Thanks for watching, and see you in a future update.